Hello, thank you for listening. This is Ian Stafford-Taylor, Chief Executive Officer of the Equals Group, and I'm joined by
Richard Cooper, the CFO of Equals Group.
So we're going to go through the first half results for the company and update you on where things are now and look forward to the future about how we're going to continue to grow the company and the overall state of the business. So I'm going to flip on to the second slide. Here we're overviewing the business as it now is, and a reminder to people who haven't seen the business for a while, and to introduce it to people that haven't seen it at all. The company is in the financial services, particularly payments spaces, making with a heritage in foreign exchange, international payments, has very much a B2B, so corporate customer focus. That wouldn't have been true if you'd been listening to this 3 years ago. It was very much the other way around. We've moved from a retail business to a business focus over the course of those 3 years. Revenues 3 years ago are almost 2/3 retail, 1/3 corporate, and now we're literally the mirror image. And we provide integrated currency solutions for the SME space, so small and medium-sized businesses in particular, with a focus there. And we do that on bank-grade infrastructure and with bank-grade connectivity into the various payment schemes. The business is highly trusted. It's got a great Trustpilot score. It's actually FairFX, which is one of our sub-brands for the retail side, was the most recommended brand in a YouGov survey recently. And that does shine a light on, we augment fintech, so clever stuff you can do on phones and tablets and laptops, with human intervention. So we have good customer services, there's people you can speak to. That's a theme in the company. We have a strong portfolio, so we capture a diverse client base within the overall Equals brand. We have Equals Money, which is the B2B brand. FairFX, which was the heritage brand on the retail side that we're retaining for the retail client base. And Card One Money business is the banking platform that we have that caters to small and retail consumers. An idea of scale, the current KPIs for the business, we like the concept of a working day revenue number. It gives a very easy indication internally as well as externally, right, we need to make that to do that. And we do this on per working day, so around 252 days in a year. Current revenue per working day is about £114,000 a day. Our gross profit drop down percentage is 63%, and we'll be working harder on that to get that even higher, but that's a good number. And we've got 280 employees. That's come down significantly, and you'll be hearing through the presentation how we've really got to grips with the cost base of the company. At its peak, that number was 337, and we anticipate some further reductions as the year goes on. The business is in good shape. It's a robust balance sheet. We have 7.6 million in free cash available to us. As you'll see, that's only marginally down from the number we reported in June. So in 3 months, we've basically held on to our cash so we can cope with the new headwinds, of COVID, rebirth, and also Brexit with confidence. And to give you another idea of scale, we've got around 10,000 companies using the platform and growing fast. And we've got a flavour there of some of the more household names that are using us. Flipping over to slide 3, just a bit more meat on that story. Revenues in the first half were robust despite COVID, as you will see continuing into the second half. Particularly that's from the B2B side, and particularly within international payments, as you might expect. The corporate platform, which is an expenses platform based on a prepaid card within which you can do all your expenses, and removes a lot of back office friction of actually paying those expenses. That's actually recovered slowly back, but it's now back to around pre-COVID levels, and we've re-platformed it, so we're in a good state on that product. We've also upgraded the board. We've got a new chairman and had a governance review. So we're making sure that everything is correct there too. Cost savings I mentioned earlier. We've already achieved significant cost savings, and obviously that takes time to percolate through. So we'll see even more benefit from that in the second half than the first. And we have more to do. Richard and myself are all over the cost base. Just on the headcount numbers, we go through, Richard and I, literally name by name, line by line, with every member of the exec on a monthly basis to make sure we don't get what we term headcount creep. A key part of what we're landing here today is we've been building a lot of good stuff in the engineering areas, good product, but obviously that's worth nothing if you don't sell it properly. And we've refreshed our sales and marketing approach, very much data-driven, and I'll talk a bit more about that later. I mentioned the cash balance already, that it's stable, and which is a great place to be. And with COVID and Brexit, we do have numerous scenario models in place, so we know if we had to cut more cost, where we could do it and what the implications would be. So we're well prepared for anything that might be thrown at us. Richard, if you could.
Yes, so moving on to a financial overview on slide 4, I think the first thing to say is that whilst historically the company and the group have been known as a travel cash business, it is no longer the case. 85% of our revenues are non-travel related. Now, our revenues are sourced from underlying transactions, and we get close to 100 basis points of our underlying transactions driving revenue. So in H1 2020, we had 1.6 billion of money flowing through our hands, similar level in H2 2019, and up from 1.2 million in H1 2019. And despite the interference of COVID and Wirecard, we managed to drive up our revenue, partially based on acquisitions from H1 2019 to this current reporting period. The acquisitions we made contributed 2.7 million of revenue and have proved to be a tremendous success in improving our financial performance, but B, giving us greater productivity and bandwidth. Adjusted Ebitda is before exceptional items, which have been massively driven down over the last year. The only exceptional items we have are the obvious ones, which are COVID and Wirecard. 2019 saw a very, very big development build. You can see the capitalization there of 8 million, which is massively shrunk now to 2.5 million. And as Ian has already mentioned, we're in a good cash position. We're rapidly approaching cash break even, which is highly unusual for a fintech. It's at times like this where we should not lose sight of the fact that we are effectively custodians of 1.6 billion of transaction values. So at that point, let me pass back to Ian and slide 5.
Thank you, Richard. So just a few operational highlights to take you through. As regards COVID, some of the investment we made in prior years meant that we could work from home effectively, the entire workforce. And just to give a little bit of insight to that, whilst it's relatively easy for everyone to use Zoom and sit at home and have a laptop, as a financial services and a payments provider connected to the Bank of England, amongst other things, and Barclays, RBS and Citigroup, you can't just connect that way. It has to be secure. Data has to be secure, and there's all sorts of protocols you need to have around all of that, all of which we had in place. I think it's testament to the company that pretty was a seamless transition to the work from home status. We availed ourselves of the government's furlough scheme, particularly, we have several bureaux de change that we had to close down during that period. And at the peak, we had 73 staff out of over 300 on furlough. and everybody who wasn't furloughed took a 20% salary cut for April, May, June, and really pulled together as a company in somewhat, you've got that sort of, where crisis bonding going on, which has stood us in good stead going forwards. We had a cost reduction program plan, actually. We started enacting it late last year and we're in the process. But we've accelerated that. So COVID has in some ways forced us to get on with that faster, which is a good thing. We also took particularly in April, the sort of hiatus there to restructure and refocus the exec team, lean it down, make it more accountable. And that exec team's working exceptionally well. We have a new CTO and basically a new head of product, and they're driving rapid rollout of new products. And so we're positive when we look at that going forwards. Richard alluded to Wirecard. Wirecard, a massive German banking entity that went into insolvency towards the end of June of this year. We actually dealt with its subsidiary in the UK. And whilst that was okay as a business, the confidence in it completely collapsed. And so we knew that we had to move our card business, and mostly it was our retail or B2C FairFX cards that were on that platform. And we had a plan to move off anyway. We were going to do that, but we would have taken our time, probably over a year, because to move customers means recarding. It's painful. It gives a big operational burden. So you spread it out into cohorts is normally the way you do it. So when Wirecard had their problems, we've accelerated that. So this will be completed by the end of October of this year. We're well over halfway through that migration. And it's important to note actually that allows us to basically even more sharpen our focus towards B2B, because the B2C card platform will be brand new. It's all already on a new website, new apps. It'll be on new rails, which are much more efficient and cheaper to run than they were before. So we've got a better operating model for that business going forward. So by the end of October, that will be done. Some other things to mention. The partnership with Citigroup, we're getting more and more integrated into Citigroup. They have exceptional platforms there. And what Citigroup has that many banks don't have is clearance capabilities in many countries around the world rather than using so-called correspondent banks. So the partnership with them will further improve our ability to move money quickly, efficiently, and with local settlement. The compliance system we've put in, very important. We've got a focus now, as I mentioned, on sales and marketing. To the extent you get a corporate interested and then it might take them 2 days to fill in a form to become a customer, you're going to lose them. And so anything you can do to reduce the friction of that is fantastic. And the platform we've put in does exactly that. It's very, very slick and quick and does a lot of the KYB and KYC automatically. I've already mentioned that the B2C card website and app have been refreshed. And we put in a revised phone system. The old system worked okay, but especially with remote working, it's even more important to keep very close control, monitoring, etc., of the calls that are being made and have them efficient and the platform reliable. So improving that was a reasonable investment, more than justified in terms of increased efficiency and productivity out of both customer services and outbound sales. On the governance side, I mentioned already that we've improved the board. The head of Auditcom has got a very impressive CV, ex-PwC partner, forensic accountant. And we had an external review performed that we commissioned by Grant Thornton, which gave us a clean bill of health and pointed to some stuff that we could upgrade, which we have. So we're very content on the governance side. In terms of that sort of where we are and what we have done, and now I'm just going to flip on to what we're working on right now. So for the next period, we've sharpened our go-to-market focus. So as the Equals Group, we actually now, as I mentioned, we have the Equals Money brand for for B2B and fair effects for B2C. So it's clearer, easier, and everyone understands exactly how that all works. We're pushing hard on the revised sales and marketing approach for B2B to drive up acquisition of new customers, and at the same time tackling what we call the back book, which is the customers we already have, to earn more out of them or re-engage with them. Data is vital. We have built a good data team, and initially the focus of that team was more on the financial reporting side, both internally and externally, but we're turning that firepower now onto the sales and marketing side so that we're smarter about how we gain customers. Hand in hand with that is the CRM upgrade. We've identified a new platform we want to use. A good CRM across the whole group is vital to the whole optimization of sales efficiency. On the B2B international payments side, we now have a brand new dealing tool or international payments tool live that customers can use self-serve. And we also use the same platform internally for our dealers, hedging customers' trades. And we're going to add functionality to that over the course of the coming period. We also allude to this B2B2B strategy. What does that mean? Our infrastructure in some areas and increasingly across all areas is getting so good. In many cases, it's better than banks have. So, for instance, our faster payments gateway, we're direct members of faster payments, the sort of instant 24/7, 365 payments tool that we all use ourselves. Our gateway is so efficient that other financial institutions can and will use it. So what that means is that we offer our payment solution to another financial institution, and they then offer it to their customers, typically therefore B2B2B or B2B2C. We also have an EQLS Connect product, which basically does the same thing on the international payment side, so we can allow other FX businesses to use our platform to deal with their customers. And this is important because ultimately in payments, what matters is volumes. Richard alluded to 1.6 billion going through our hands in the first half. The more volume you do, the cheaper everything gets. And actually, the more volume you do, there are bits of the supply chain you say, well, we'll do that ourselves, take it out. And what we find is that the solutions we're coming up with are better than people get elsewhere on this level. So it's a great way to access volume in the market and drive down unit costs. On the infrastructure side, we've got a project that we're midway through in terms of radically improving the clearance capabilities for a customer. So right now, if someone sends us sterling, it appears in their account instantly, as you might expect. But actually, to do that is not that trivial. And we will be doing it in up to 35 currencies relatively soon, with partially an eye there on the so-called market trader businesses, which is sort of Amazon traders, etc., which obviously in these times is a massive growth market, and there's a lot of potential for us to win a decent chunk of it. Wildcard migration, as I mentioned, because of the travails they had, this effectively, in inverted commas, completes our B2C platform renewal. And that does release the sort of fantastic pent-up energy of the company that's been focused on doing that onto B2B stuff as we move forwards, which is a big positive. I'll hand back now to Richard for the CFO review.
Thank you, Ian. So moving to slide 8. We start with an Ebitda overview, and I will talk more to what's not on this slide than rather than what is on this slide. So the variable costs, let's talk about those for a moment. So those are really transaction costs, affiliate commissions and staff commissions, and you will see that our gross profit margin has remained pretty consistent. As the business mix changes more to international payments and B2B, we'll see a subtle change in gross profit margin. Gross expenditure, that's a really interesting number to look at, not least because if you compare the first half of 2020 with the second half of 2019, you'll see that in a period of 6 months, we've cut our costs by 4 million. Further down the page, we come down to our adjusted EBITDA, and then on the right-hand side of the page, you can see how we go from adjusted EBITDA to Ebitda. And I would just point out that the Wirecard provision of 530,000 is a non-cash item. So again, if we made a comparison of the sort of non-cash items between H1 2020 and H2 2019, H1 2020 was significantly better under all measures. Moving on to slide 9. And again, I'll refer to the things that are not necessarily obvious on this slide, but are quite important for the understanding of the business. The first is the amortization line contains amortization on business acquisitions, which were broadly 400,000 in H1 2019, 500,000 in H2 2019, and 600,000 in H1 2020. The R&D credit accrual is a really important number for us because it helps to underpin the capitalization spend. And we had 2.3 million in the whole of 2019, which HMRC owe us. We've accrued 730 for this period, and we expect that the end year figure will be about 1.2 million. So very, very significant cash number to underwrite our investment. Moving on to slide 10, this is a bit of a slicing and dicing of where the money is made between international payments and banking, followed by those products that are, most notably hit by the COVID pandemic, which is cards and travel cash. Cards in this instance includes the spend platform, which we haven't broken out at this level at the half year. But again, you can clearly see, where the money is being made. International payments going up from 4.8 million to 7.1 million to 8.2 million. Banking a little bit softer, but we're not discouraged by that performance. No point hiding away from the impact that COVID has had on cards and travel cash, but it does show you what we believe we can get back to in terms of our revenue, when we have a fair wind. But to re-emphasize my earlier point, we're not really a travel cash business anymore, with only 15% of it, or possibly even less, sourced from that. Gross profit margins, again, you can see the relative consistency of that from international payments and banking, and lower from cards and travel cash. Moving on to slide 11. What we've done here is try and take the reader through a bridge from each period's profit and loss after taxation to the next period's result. So again, you can clearly see the pattern of trading here from the first half of 2019 up to June 2020. A big cyclical change in the last 6 months, taking us through there, despite a drop in gross profits, which is caused by this revenue impact in between H1 2020 and H2 2019. Moving to our favourite slide, which is the cash movements. What we've done here is tried to present a rather old-fashioned cash flow statement, starting with adjusted EBITDA, taking us through the impact or the cash impact of IFRS 16. What's been spent in terms of exceptional items, which we've alluded to already. What we have capitalized, and we've already received some R&D rebates. And then right at the bottom of the slide, the amount of cash or liquidity we had at the reporting period, and on the right-hand side, the split of that between banks and liquidity providers. And just to give some indication of the quality of security, our banks on balance sheet include Barclays, Citibank, and NatWest. We have a fiduciary duty to look after some funds of customers, that they are not on balance sheet, and the primary deposit is actually with the Bank of England. Our liquidity providers are also, well-known, trusted names: Barclays, Velocity, and Sugden. So, we've moved away from a risk profile there. Moving to slide 11, this is a liquidity guide for the reader, showing what we've got in our house funds. We do have some cash stock as well for our bureau. What is our receivable in terms of R&D, and net of our deferred PAYE. So when COVID bit, as Ian suggested all along, we took some immediate actions, and they were to avail ourselves of furlough, to introduce a salary sacrifice, and to immediately defer PAYE. We still have a deferred PAYE liability. We've reached a settlement agreement with HMRC, and we have paid in full July and August. So, if we do hit, if the economy does hit the buffers again, readers will say, well, what are you going to do this time round? And we've got three particular measures lined up that we can talk about, and one that we probably won't talk about too much, which is in relation to our property commitments. But you can see the delta between what we are owed from HMRC and what we owe HMRC. So immediately we could effectively draw down that £500,000 by deferring another PAYE month. If we took a 10% salary sacrifice over a 3-month period, that would add another 400,000. And then we could probably nickel and dime another 100,000 out of our cost base, giving us an extra £1 million to guide us through the storm. So I think a pretty good position to be in, given the circumstances. And I don't think there are many other fintechs that are, at this level of earnings and this level of security in terms of their, approaching break-even position. Ian, may I hand back to you?
Yes, thank you, Richard. Very thorough. If we could go on to slide 15. So what are we going to do for the next 6 months? I alluded to a far bigger focus on the sales and marketing side of what we do. So let's drive more customers onto this outstanding product suite that we have that's improving constantly. Utilizing data right from the start. If you think of the whole funnel, from actually starts before speaking to a customer, is even to the mundane thing of lead sourcing. You get lead lists, but actually paring those lists down so that we're calling businesses that are more likely to want the services that we're providing. So means that you'll get higher conversion when the calls are made. So starting there all the way through, targeting, as you can see, CFOs or MDs of SMEs with multi-currency exposure. That's our target get through to call person. And not just via outbound calls, but social media, LinkedIn, we have targeting profiles for all of that stuff, and all measurable, and links to that CRM project that I alluded to earlier. And we're focusing not just on bringing new business in, but on the back book itself, existing customers to re-engage or earn more or do more business with. And the cross-sell element, let's not underestimate that. We put together several businesses, and there's still definitely a lot of opportunity for pushing up the average number of products per user, so-called APU, and we'll be working hard on that. And last but not least in that regard, affiliates. It's a fantastic way of getting at market volume as well, is to go through third parties. We have an affiliates team we've built up that's really bearing fruit now, and we will do more of that. We're also carry on working on, whilst we're capitalizing a lot less, as you can see from Richard's numbers, we are still building a lot of stuff, and we'll continue building a lot of stuff. And key to that first point, integrating the spend and international payments balances to the banking platform, so customers have everything in one place, and you streamline the onboarding process, as I alluded to earlier. So it's very easy for a corporate to become a customer, and it's very easy for them, once they become a customer, to access all the products we have. It's all in one place. We will make further enhancements to the international payments online tool and the spend platform itself over the next 6 months. On the payment side, we're going to add the ability for customers to trade forward contracts as well as spot contracts through the tool, and add in live chat to broker, broker being our dealers, so that customers, even if they're dealing self-serve online, can get the market color from the broker. And I mentioned earlier this concept of instant deposits into 35 currencies through Swift partnership, and also we already have what are called GB multi-currency IBANs. I don't want to get too technical here, but you know, an IBAN is an internationally understood sort of very long number that describes your full bank account details. And if you issue them out of a UK entity, they're prefixed with GB. We have multi-currency IBANs already, so people can wire in any currency and drop it straight into an account with that IBAN prefix. But we want to add also non-GB prefix. So, for instance, a DE for Germany, we'll be adding over the next 6 months. Richard mentioned about sort of Brexit phase 2, COVID. I should allude here that, you know, generally what's bad for us as a business, and actually bad for any business, is uncertainty, you know, or lack of clarity. And we saw this last year with a lot of Brexit uncertainty, and then the general election with a clear result. And as soon as that result came out, you know, there was clarity, at least for 3 months, and business takes off and we see that coming straight through us. So we had a very, very busy December, for instance. Right now, there's 2 big uncertainties, being Brexit and COVID. And as time goes on and they are resolved or managed in one form or the other, just the fact that you then have clarity will release a lot of business. And so I can see a sort of pent-up demand for our services that will come at some point during next year. But we have these plans about what we could do in various scenarios, and as you've seen and heard, much tighter control anyway on headcount and costs, and we have solutions to move the dial if everything gets bad again. And then looking at a bit further, B2B still the focus here. The left-hand box here is the sort of standard, give you some idea of the sense of scale of the opportunity. So what we've got there, some numbers from McKinsey, but the key one is $150 billion per year of revenue, not turnover, revenue, is the size of the prize for just SME, the SME segment of international payments. That's the bit we're trying to get at. It's huge. And let's not forget that the vast majority of that still sits with the banks, not with other fintechs, but with the banks. And that's what we're aiming to get at. And we get at it by offering this sort of fantastic range of FX products, but combined with this bank-grade infrastructure that sits underneath it. So serving SMEs is our clear priority. And encapsulate that with simple integrated payment solutions to help SMEs manage their multi-currency exposure and cash flow. That's really what we're doing here. And you do that through this end-to-end simplicity and the multi-currency IBANs I mentioned, straight through processing. And increasingly, we'll be automating smaller trays so people can trade those themselves online, and augment that with the dealer interface or broker service if people want it and need it. And many corporates do, because they develop very strong ties with the dealer that's assigned to them. The business, the equal spend corporate platform, as I mentioned earlier, we're going to widen the use case of that. Right now, it's quite narrow. That it really is good for solving the expense riddle. People only spend what's on the card, and you can do your expenses in the platform. But by investing a bit more time in the platform, we can widen it out so you could use it for procurement, a purchasing card, and again, lower the onboarding friction. The last point there, historically we have been, we're still targeting SMEs, but we can elevate the services we can offer in terms of currency management tools, hedging models, such that we can get more integrated with the corporate, and not only do they transact with us, but they rely on products we give them to help them manage their exposure. I mentioned the B2B2B, B2B2C propositions earlier. We can carry on pushing this up as we further enhance our underlying payments infrastructure. We can and will continually offer this externally. I see this as a very good opportunity for the company. And we sort of covered the consumer cars B2C side a bit earlier when we talked about Wirecard. Ultimately, as I say, we've completely re-platformed the whole thing, or that will be complete by the end of October. And we'll carry on, therefore, in effectively having this niche strategy here. We're not mass marketing, trying to compete with people that would do it for nothing. Targeting UK-based ABC1, so higher demographics that are more likely to travel or have foreign investments. And so we can run that business. It will be a much lower cost operating model. So we can run that leaner than before. Moving on to the overall summary and outlook for the business, which obviously includes a little bit of what we've done over the last 9 months of this year. So the performance has been robust under what everyone would acknowledge are extremely challenging circumstances. We have tackled costs. We've made significant improvements in costs. So Richard alluded to a delta of 4 million earlier in the presentation. And we'll carry on with that. That's not a sort of one-off exercise. That is a relentless focus. Within the exec team, as I mentioned that we'd restructured it, you can see that, that's become the culture. We're not wasting. We want people here who are committed, work hard, driving forwards the business as a whole, and not people who view it as a 9 to 5. Cash position is in a good place, and you've heard from Richard what we can do, even if things go south. The product roadmap that we have now, it is a flexible document in that we evolve it as we move on based upon what we see and what customers are telling us. And again, as an exec, we go through this literally monthly to check we're building what we want to be building in the way that we want to build it. And we're developing product very rapidly now. The cadence of engineering is fantastic. The data-led CRM, key, absolutely key. We've assembled a great set of products, great levels of connectivity into payment systems, and access that is not easy to replicate. Even if you have a well-funded startup, it takes a lot of time to replicate what we have. But the key to it now is to get more customers on it, and the CRM side of that is vital. M&A, we did quite two decent-sized acquisitions in 2019. We could have done more this year. These are generally international payments businesses with a B2B focus that we could acquire. Typically, though, there's an upfront payment, and whilst we are very, very much laser focused on conserving cash, it's hard to get those done. That said, we're working on seeing whether we can overcome that hurdle with some creative thinking. And so if opportunities present themselves, we will take them up, and we are seeing them. Just a refresher on the revenues per day. You can see how Q3 has rebounded back from Q2. We're obviously driving that forwards as we move through the rest of the year. And the business is resilient. Hopefully you've got that from the numbers that Richard ran you through. We're self-sufficient when we have plans in place for what might happen over the course of the next 6 months. So business is in a good place. We're very, very content with where we are. We've got a clear growth strategy to move forward from. And that is the conclusion of the presentation. And speaking on behalf of myself and Richard, I'd like to thank everyone for listening. Thank you.
Thank you.